Hey folks, glad you could join us on yet another conversation on Business Redefined. As always, this is your weekly, most comprehensive look at the world of business, finance, and economics. We are dialing down on 2025 and we want to take stock of the macros and the investment landscape. And we're privileged to have the managing principal, CIB at Absa Bank. That is Mr. James Agin, not a stranger here. Karibu sana.
Thank you very much,
James, how have you been since we last sat?
No, been very well, thank you.
Yeah, some huge transactions this year.
It's been a good year. Yeah,
Your pipeline has been solid.
Yeah, no complaints.
So the macros globally, locally has evolved significantly. What do you make of the state of play? What sort of pockets of opportunity did you see being unlocked in 2025?
Yeah. So I think 2025 was actually quite a roller coaster year, I must admit, especially if you look at the global environment. What's been happening in the macros globally, a lot of geopolitics coming through, all the tariff conversations taking place, was really a state of turmoil. And in fact, it was a reset where unpredictability now is the norm.
Yeah.
And you just have to learn how to navigate through that. But I think, in my view, it has played very well, especially for the African economy. And what we've seen now in the local economy is where we've seen a lot more stability. And if I just zero down on Kenya specifically, the macros have been extremely stable and predictable.
Yeah.
And I think for me, that has created a very, very conducive environment for business and investment to actually take place. Exchange rate, very stable.
Interest
rates actually moving in a manner that has really stimulated economic activity.
Yes.
Inflation at levels which are really great. The weather patterns very, very good, and therefore a very good reset for the economy to actually start picking up. We saw it in the private sector credit space, that also starting to pick up, and therefore for me it has created a very, very solid environment for investment, given that consumer spending now can start going up. Rates have come down, so borrowing activity can pick up. And in the very, very value chain that happens, even personal sector, demand picks up, then the corporate businesses also now have an opportunity to start expanding, growing, and feeding into that economic growth that we are seeing. So very excited about the fact that the environment has actually has been very conducive for economic growth to take place.
James, your portfolio activity has been heavy. EABL went back to market. We saw the securitization transaction, which was courtesy, of course, of Absa Bank. ETF. Give us some color around the notable transactions you've worked on, especially those three.
Yeah. No, I think it's been a great moment of market activity starting to pick up, and not just traditional lending activities, but a lot more innovation coming into place and market deepening. To your point, I think we're just at the conclusion now of the EABL medium-term note. Again, a very good re-entry into the market, and to just start giving alternative asset classes to actually come into place. We've seen consecutive tranches of securitization transactions taking place. I think the other day in the media, we saw the likes of Sun King now even going to the extent of opening a manufacturing plant, at Tatu City, which I think is very, very good outcomes of, structuring activity that has taken place in the market, as it were. The ETF, I think, very, very excited that for a long, long time, it was only the gold. Now we saw the Satrix come into the market. Yeah. That has also, come into a very, very good place in terms of different market dynamics and opportunities that come into play. But also in the capital market space, I mean, we saw rights issues come into play, etc. And that, again, for us, has kept our investment banking team very, very busy. And again, just a sign that the economic activity and a lot of activity in the corporate banking space has actually come into place. And there are also M&A activities which are taking place, which of course are still not concluded, so we cannot talk about them, but a lot of activity taking place, and just a good sign that we're seeing a big pickup in the economic space.
What sort of opportunity do you see in infrastructure? I see you have a lot of appetite for that. Many would be abundantly cautious around it, because definitely it's an asset class, if I could call, which has a long-tenured kind of ROI perspective. How do you manage that, James?
No, and I think infrastructure, and I must commend what government is doing, and I think we saw in the public domain the other day, things like what is being done on roads, bonds, and the way all that thing is being structured. And I think what stimulates investment in that area is just that level of predictability that even in the long tenor, there's certainty around where the repayments are going to come from. And on the back of that, now we are seeing a lot of financing come in place to support infrastructure activity. And at the back of that, a lot of continuation of projects taking place. I mean, first, if you look at things like what the proceeds are being used for, especially on the bridging around that, right now, when I drive around the roads of Nairobi, I just see construction activity taking place.
Yeah.
That has come through. We are seeing a lot of that being pumped back into place. Even just economic activity that has come through out of payment of pending bills, it just feeds back into the economy. And that actually helps in a big way. But most importantly, in terms of supporting infrastructure projects, now that we're seeing a lot more different innovative financing structures coming into place, that will help what was a queue of infrastructure projects actually start being done earlier on. And that again just has a big ripple effect into contractors, the ecosystems around them, and therefore a big economic uplift because these infrastructure projects come with a lot of development around it. I was just reading an article the other day just talking about what has happened to values of property in Keno. Yeah, just as a result of infrastructure. So very excited about that. Very excited what we're seeing about the Rironi Mau Summit road that is really being pushed to come into place, and the economic activity that will come out of that for me is a very exciting space where we as Absa are very committed to come in and ensure that we play our role in driving those activities in the infrastructure space.
All this green shoots aside, James, many retail investors will tell you we still feel locked out of these opportunities. We're not able to plug into the market. And it's really either not understanding the products in the market or genuinely feeling that the products don't meet your needs. Majority of us are now in the MMFs. We have seen the yields coming down. Of course, the returns are being constrained a bit.
Absolutely.
But how does Absa then help the retail market to plug into these opportunities?
No, and I think for us, we have been very intentional about making sure that any products and opportunities which are coming in place are available to the retail players. Just the other day, I was getting a challenge from an investor saying that I really want to participate even in, say, the Eurobonds, but the ticket sizes are too big. What can you people do to make sure that you design products that allow us to come into play? And what for me is most exciting is that because we've got a whole suite of capabilities in the bank, because we've got our Absa asset management team, we've got our Absa securities team, and we've got our global markets team. And what we're working on now is that how do we package these products in a manner that they can then be distributed in smaller chunks to attract the retail investor? But most importantly, how do we make sure that the education process is also out there to just make the retail investors, one, understand what they're getting into, what are the risks, if any, and how can we help them mitigate against that to just give them comfort into coming into place. So what for me was very exciting is that I saw a lot of retail investors reach out even about the EABL medium-term note. They wanted to participate in it.
But the ticket was really brought down.
Yes, exactly.
Exactly.
And for me, I think bringing down ticket sizes to levels where retail investors can come into place is actually an obligation, a responsibility we have as players in the market to ensure that actually happens. So for us, Julians, it's a very intentional part that we are playing into to ensure that we allow as much as possible retail investors to benefit and participate in these opportunities that come to the market.
Every Kenyan is asking, given the trend we are seeing with the yield curve and how much it's tapering down, do you still see an opportunity in the fixed income segment looking in 26?
Well, fixed income, I guess, depends on how people are planning their portfolios. I still see opportunity, especially on the further end of the curve. I think those yields are still attractive.
And long term.
Yeah, exactly. And to me, I kind of see it's a reset. So this will be the new norm now. So I'd encourage people that there's still opportunity in fixed income space. The yield curve is still positive in terms of the direction of the curve, and therefore people can still invest in the fixed income space. The beauty is that it's tradable. Yeah. So you can read the market, you can get out if you want to get out and get back in. And I think that opportunity then allows people to then be able to make decisions. But as of now, I'm still seeing quite some activity in the fixed income space. Yeah.
James, looking into 2026, what are some of your key factors you are pressing your finger on, saying this will be a key determinant, a key driving factor as we look into the new year? And how do you expect it to shape the investment landscape?
I think for me, 2026, present an exciting opportunity because 2025, as I said, was a reset year.
Yeah.
So everybody was grappling with, okay, what is the new norm now? How are we going to play in this market? And what will the macros then play out and look like? I think we've come to an environment now where it is very stable, very predictable, and we've kind of gotten to a stable point. And for me, the most exciting thing about it is that with the low interest rate environment that is coming to place, the pent up demand that was there, whether it's right from the mortgages, the SME loans that just the price of credit was just too high for that to actually take place. We are seeing now an opportunity where it's affordable. We were just discussing mortgages the other day, and what KMRC is doing and single digit mortgage rates. That then the ripple effect into the construction space, into affordable housing space, etc. So for me, I'm just seeing an opportunity where because of very stable macros, GDP is still trending in the right direction, a lot of infrastructure development picking up in a very, very big way. There's opportunity now for ecosystems to take advantage of this and start seeing economic growth because of a very, very attractive and interest rate environment that makes borrowing affordable. The banks, of course, are making less margins out of that, but the idea now is to drive on volume. Yeah, and the beauty about it is that even in terms of non-performing loans and strain, we're seeing that coming down. And because of that, therefore, increased activity coming into place. So for me, the environment which has been created by this very, very stable, attractive macro environment, I've seen 2026 a year where we'll see a lift up in economic activity, a lift up in lending activity, and therefore a big growth in the economy going forward. So for me, very exciting period for us. The banking sector, we've seen the numbers the way they've been. I really expect an uplift in line with the economic growth that we're seeing in the industry. Yeah.
But James, how do you explain what Kenyans feel is a decoupling between the good macros you're talking about and the tight micros we are experiencing? Many Kenyans will tell you there's no liquidity, there's no cash flow, our pockets still feel tight.
Yes.
The numbers look good at the top level, but at the household level, we can't relate to this. Where's the disconnect, James? And do you see this now having a turning point in 26?
I honestly see a turning point. And for me, just the impact we saw with the payment of pending bills. I think that ripple into the economy, we actually felt it. We actually saw SMEs all of a sudden being able to meet the obligations, and that filtering down to people who are worried about employment, saying, oh, now actually we've been recalled back, and we're starting to see activity coming through. So, Julian's, my view is that it will be a lag, but that turnaround, people are going to start feeling it. You see, what people spoke about previously is that, they had to deal with, levies, a few of health payments to come into place, which have now been factored in. I think the only way now is up. The other day I was, talking to just one of the motor industry players in the economy, and they were saying that they are seeing the boom. They're already seeing demand picking up. They're already seeing, vehicles being purchased and people waiting for orders to be delivered. And in fact, we're talking about it back at work that there are many different touch points we can now look at to just get a sense of, is this filtering down to the economy? So, Julius, my view is that it's just a lag effect. That lag effect is coming to the tail end, and now we'll start getting that feed coming through and building up, and people starting to feel that money coming through. Very optimistic about it.
Given how many corporate actions we have seen you as Absa midwife in 25, how does your pipeline look for 26? And here you can give me a good score.
No, 26 pipeline is good. 26 pipeline is good, I think, and sometimes is people to take the lead into that, and then others see and say, actually, there's an opportunity that can come out of this. We can actually do a medium-term note, and people will have interest in taking it up. That diversification of asset classes, we spoke about it in what we've just held now about the pension fund and the insurance, and the pension industry actually now starting to pick up. All that money needs to be deployed somewhere, and therefore working very hard to see that coming through. The pipeline is very, very good, and the beauty about it is that it's not only we are seeing it in DCM. We are seeing in equity capital markets, we are seeing it in M&A activity, that there's a lot of interest coming through around activity in the investment banking space. Therefore, again, we'll have a very, very busy 2026 based on how the pipeline is looking. A lot of activity,
Everyone looking at banking right now, the item which hangs over your heads like a sword is a question of asset quality.
Yes.
The latest numbers we have from the Central Bank of Kenya indicates that the NPL ratio is still trending at about 17%, which is high.
Yeah.
From what you're seeing, I know you have mentioned that you're beginning to feel some touch points in the economy where there's a turning around of the corner. Are you seeing us improving this significantly? Is the stock of NPLs actually shifting positively now?
It is shifting positively. And I think you can just see the weight of the high interest rate environment that we came through that was kind of holding that NPL situation where it is now. With the rates coming down, the ability of people to start servicing, we're starting to see that coming and seeping through. With pending bills being paid, that again, we're starting to see it feeding through. Where facilities which were stuck, we're starting to see now money starting to come through and people say, okay, I think I can now start servicing this. Why don't we work out a plan around it, etc. So I'm also of the view that I think we've passed the worst, and we're only going to see an upward shift in this. Government initiatives on pending bills, the interest rate environment, it can only improve the NPL situation. So I'm of the view that we'll only see that getting better.
And what would be some of your policy priorities if you could make a recommendation looking in 26 in terms of creating a more enabling environment for the private sector to thrive?
Yeah.
What would be some of your focus areas?
I think for me and as a bank, what we're doing is what the central bank is doing, especially like introduction of Kesonia.
Yeah.
I think for us, it's just rally behind that and make it become live very quickly, implement it, embrace it, and drive it, because it's bringing predictability. It's bringing a very good benchmark through the entire industry, can have a good leading indicator of what should I expect and how do I plan for it.
And transparency.
Yeah, absolutely. And that and quick transmission, because I think that's one thing that has been a challenge around the speed of transmission. So that coming into place for me are those kind of policy interventions which are good for the economy, and therefore the embracement and everybody coming on board to implement them, explain them to the clients, let everybody know how that will work, again, is going to have a very positive impact on the economy, as it were. So for me, those kind of policy interventions are what's really going to drive the economy as we move forward.
By the way, as we look forward to DECFAS, where we have, of course, the effective for new variable loans, are clients warming up to this conversation of Kesonia?
Oh, yes, they are. I think the predictability is actually very, very good for the clients too. And just that appreciation that the transmission will be very quick. They are warming up to it. Many needed an understanding between, what does it mean for me from my current state to where I am now? There are reference to Kesonia, there's reference to CBR, how does that work? Just kind of showing that there's actually one depends on the other, and there's a convergence of those two, so there should be no concerns around that. No, clients are warming up to it. We do a lot of sensitization sessions with our customers just to explain to them what's going on and how then it will play into their business going forward. And it's something that's very welcome. Yeah, the clients are really looking forward to that too.
James, as we wrap up our conversation, digital innovation and product innovation, actually, the digital capabilities and product innovation is something which has really shaped the banking sector in the recent past. What can we expect from Absa looking into 26?
No, and for us, I think into 26, it's an area we've invested in very, very heavily. If I look at areas like our trade finance, our custody business, which recently came through and has picked up extremely well, we are quite happy that we provided our clients with that whole array of products that can serve them on an end-to-end basis. But in terms of digital solutioning and all, especially in the transactional banking space, we are really trying to make sure that we give clients conversation time on building solutions and solutioning them, not on day-to-day normal transactions. We've seen that digitization in our global markets business come through. Conversations now around how do we build risk management products around your normal day-to-day business. In our trade finance business, we're seeing now a lot of digitization on the trade side, on the letters of credit side, and the normal documentary trade side, where now that's in place. Trade management online is being used by clients without leaving the comfort of their desks. But most importantly, as we go into our value chain solutions, where we are looking to support our anchor clients in terms of their suppliers and their distributors, many have said this should be automated, digitized process. And now that is something we invested in. On the distributor side, digitized already. On the supplier side, digitization in place, so that we just make it so much more easier that the normal routine product should be done online from your desk in comfort. Conversations should be on quality around advisory, thought leadership, sector expertise, and how to grow your businesses going forward. And for us, we're quite excited that that's really been embedded in the way we do our business. There's always a view that the corporate investing banking space was still very manual and the retail and SME space was digitized. I'm quite happy that that bridge now
is flipping.
it's flipping, and the digitization space now is taking place across the board. And we're quite happy as Absa that we're playing a leading role in that journey.
And now that you touched on it, James, how is the custody business and the return to it playing out?
Excellent. No, we are very excited that first, we came through with now technology that makes it digitized in terms of a custody business, but we realized that custody is a very trust-driven game.
Yeah.
And I think the fact that we historically were leaders in that space, we've actually found that some of the players are still there, same people we dealt with, wondering what took you so long to come back. So the embrace has been really, really good. And that business has flown off the cliffs way above even what we projected to be. So very, very excited about that custody business. We are now having to grow the team because, you know, the demand has come through faster than we expected. So very, very happy that that was one of the missing cogs of the wheel, which now that we've put in place, the wheel now is moving very smoothly. So very excited about the custody business.
So the heritage clearly played out for you.
Absolutely. Absolutely.
As we close, give us your parting shot, James.
Yeah. So for us, very, very excited that the reset in 2025 has taken place. Stability has come in place. Everybody knows what's happening. And the fact that the macro environment is now poised to drive growth in the economy in 2026, we as Absa are very, very committed that we are going to be there for our customers and we are going to build the stories together with our customers. So we are there for our customers and we're going to build the stories together for a very, very successful 2026.
We've been having a conversation with Mr. James Agin, the managing principal in charge of CIB at Absa Bank, touching on a raft of issues from the macros to the corporate actions we have seen, and of course, his team midwifed a lot of them coming into market in 2025, and he assures us that in 2026 they have an equally healthy pipeline. So we'll keep tabs on that to bring you the latest as and when it happens.